Hello dear traders. For today's analysis, I decided to cover the gold chart because I think that there is actually quite interesting structure on the daily time frame, because we almost reached the important pivot levels and the recent swing lows on the daily time frame. As you can see here, this is the daily chart of the gold, and you can see the lows here and lows here. This low is quite significant because from this low we got a strong upside movement back from November last year, and basically that low is acting, well, can eventually act like a strong resistance for the gold if the gold will decide to go and do another rally. But what I found in the recent 5 or 6 days, actually the whole week, is that after we got the 2 days up like this from the bottom, we basically started to do lots of the overlapping candles, and we created some kind of upside channeling mode where we got the higher highs and higher lows, but still it looks like a very exhausted on the way up, which may produce another sell-off on the daily chart. So this is actually a very good potential swing play for another downside wave on the gold. So the volume is still not that high on the gold, so it's still very light volume for the day, but if you will see any good volume and any good supply, you eventually can watch to sell for selling opportunities on the rallies with potential target at that recent low at 1677 on the gold chart. So if you want to be aggressive trader, there is an option that you can basically place a stop loss to be a little above the swing lows here. So technically, you can risk about $30 in the gold eventually to try to make about $60 at least. So you have a 2-1 risk reward ratio. If you want to be aggressive to sell from here, there is also option that you can put a stop above this 2-day high, which is technically can produce the stop loss to be about $20 and then try to go to make a $60. In this example, you will have a 3-to-1 risk reward ratio, or to translate to that, you can eventually earn 3 times more than you can risk. So one option is that you can go for a swing sell position on the gold from here 1736 and eventually place, so stop one option is 1757, and the option is when you have a little wider stop is to place it 1771. But you will still have at least 2-to-1 risk reward ratio, or in the first example a 3-to-1 risk reward ratio on the daily time frame. So I really like this structure on the daily time frame, and it seems like it's just a bear flag and just exhaustion here from last week, which might produce another downside move. If we speak about let me do the update on our gold chart from the last week. We were pretty much right about this downside cycle, and this is basically just the ABC, which produced another downside move exactly to the level where we spotted here at 1728 was a very decent level there. Now we got a rejection from there, but then the next level that I will definitely watch is this, based on this 2-hour time frame, is the 1719 level right there on the gold. So definitely a solid potential for in the next days or so that gold might develop a good downside swing, so you can eventually play for this daily bear flag and play for this downside cycle on the gold. It's not right now the good time to do that. Intraday is looking like pretty flat, but if you want to base trade like a swing trader, then you can even think about selling from this zone here and then place any kind of stop that I suggested eventually, and then try to see if we can have another downside wave on the gold.